Now, China's jet fuel exports have dropped pretty sharply, triggering a supply crunch across the Asia-Pacific. Shipments fell by nearly about 40% month-on-month in March, and the impact is now spreading across the region. Taiwan and China are raising fuel surcharges in April to cope, as soaring oil prices continue to push up aviation costs globally. So as the region's largest supplier pulls back, countries like Australia and Japan are amongst the hardest hit. And several markets, including the Philippines, Singapore, Canada and the United States, have seen supplies fall to near zero, while others like Vietnam and South Korea have recorded some pretty steep declines. The disruption comes amidst the ongoing Gulf chaos, which has tightened global fuel availability. And the supply squeeze has led to a sharp surge in prices. Jet fuel has nearly doubled from around $99 per barrel in late February to over $195 last week. And this spike is being driven by a shortage that is specific to jet fuel rather than crude oil. As a result, traditional hedging strategies linked to crude benchmarks are proving to be less effective. Even airlines with up to 80% hedging coverage are facing some significant cost pressures as the gap between crude and jet fuel prices continues to widen. Now, the impact of rising fuel cost is also visible in parts of Asia. In Taiwan, the airlines are set to hike domestic fares after the government approved higher fuel surcharges by 157% on international routes, effective from the 7th of April. The fuel makes up around 40% of operating costs, adding significant pressure on carriers. Meanwhile, in China, several airlines, including Air China, have announced fuel surcharge hikes on domestic routes. Passengers will pay an additional 60 yuan on short-haul flights and 120 yuan on longer routes starting this weekend. And this move comes as soaring oil prices continue to push up the aviation costs globally. In Australia, concerns are particularly acute, with reserves falling below 30 days and heavy reliance on imports exposing vulnerabilities, while alternative supplies are being sourced, and they're expected to come at a much higher cost. Industry experts have warned that capacity cuts and fare hikes could intensify from April and spread globally by May as hedging cover begins to expire.